Oil prices are on the rise once more. But could this latest surge signal bigger shifts in the global energy landscape? Dive in with us as we break down the latest developments in the oil market for October 22, 2025, and uncover what it all means for everyday consumers and investors alike. Posted on October 21, 2025, at 11:40 p.m. Universal Time Coordinated, and updated on October 22, 2025, at 12:28 a.m. Universal Time Coordinated, the oil market saw a modest uptick following a key industry report revealing that U.S. crude oil inventories had declined for the first time in 4 weeks. Adding to the momentum, President Donald Trump emphasized that India plans to reduce its imports of Russian energy products, potentially disrupting global supply chains. Specifically, Brent crude oil, a major global benchmark for oil pricing, traded above $61 per barrel, registering a 0.5% increase on Tuesday. Meanwhile, West Texas Intermediate, WTI, the primary benchmark for U.S. oil, edged closer to $58 per barrel. To put this in perspective for those new to oil markets, Brent and WTI are like the thermometers of oil prices. Brent often reflects international trends influenced by European and Middle Eastern supplies, while WTI is more tied to North American production and demand. These benchmarks help traders, economists, and policymakers gauge the health of the energy sector. The American Petroleum Institute, API, reported that U.S. inventories dropped by 3 million barrels last week, and this included reductions in fuel stockpiles such as gasoline. For beginners, it's worth noting that oil inventories are essentially the stored surplus of crude oil and refined products. When they fall, it can indicate stronger demand or tighter supply, often pushing prices upward. This drop marks the first such decline in 4 weeks, suggesting a potential tightening in the market. Official government data from sources like the Energy Information Administration will provide more details later this Wednesday, offering a fuller picture. But here's where it gets controversial. Trump's comments about India's energy purchases from Russia could be seen as a diplomatic chess move in the ongoing tensions surrounding global energy geopolitics. Is this a genuine shift toward reducing reliance on Russian oil, or is it more about strategic posturing? Some analysts argue it might pressure Russia economically, while others worry it could lead to retaliatory actions or unintended spikes in global prices. And this is the part most people miss: how these international decisions ripple through to your gas pump and investment portfolio. For instance, if India truly scales back on Russian imports, it might force other countries to step up their own purchases, creating fluctuations that could affect everything from fuel costs to stock market volatility. What do you think? Will these developments lead to more stable oil prices, or are we heading for another roller coaster ride? Do Trump's statements reflect real progress in diversifying energy sources away from Russia, or is there a hidden agenda? Share your opinions in the comments below. We'd love to hear your take and spark a lively discussion.